Hi and welcome to Ocean AI. In this video I'm going to do some trade examples to show you what works and what doesn't work, a few things to look out for. Also, the best way to get an idea of it would be to go through the Telegram channel where I post all my charts and live trading examples and things like that. Once you go over a few of those, you'll get a rough idea of what to look for and how I trade it. So firstly, with the time-based ones, once again, you'll get your charts like this, and we're looking for the high of the market and the low of the market. We trade from this point to this point, or this point to this point, and this point to this point. That's how it works. Sometimes it doesn't go that way, but that's what we look for, and that's how the best way to trade it. Another example over here, this is the invert, like I was talking about in a previous video. So once again, it's time-based. So we come into this point at a low, expecting a low, but we've got a high. So that's when you, instead of selling it, instead of buying the low, you sell the high. Examples there of things we're looking for. Then we move on to not following the line. With the AVAX one here with the crypto, this one, although it was sideways into the time, just an example of, we expected to go from here to here, but actually went a lot higher. So if you did this trade, you could probably trade it on a pullback here and run it up from there. That's one option. The other one is following the line here. You see a little move down like this from this high to this low, but sometimes it can be a big move. So don't always judge this bit to this bit to be just looks like a small move, so I won't trade it, because that small move can actually be quite big. So this is why we don't follow the line and just use the times. On to the next one. It's another example of don't follow the line when we want to trade from time to time. A lot of the stuff is repetitive, but it's fairly simple, and I'm just repeating it just to help you out. Right here is an alternative way of trading it. Every now and then you'll have an expected high and expected low, but what it'll be, you'll get the low or the high before the time, and then you'll get a retracement high into the time. So for this one here, we had this high, and then we got a 78% retracement into this time, and then it sold off from there. Wasn't much, but that's just an example of a secondary high. Same with this one here. We're expecting the low here, but the low was actually over here. So what you did here is it pulled back into the time, and then it rallied from there. So this is a low risk example here. So with these pullbacks, you're buying here, and you only need a risk, because if it drops below this low here, then it's most probably invalid. So small risk to reward. I'll do a video later on going over risk reward, and how much I risk each trade, but that'll be another video. So we're going to the sideways again. Once again, sideways, if you get triggered and it stays sideways, just want to cancel it. I just get out of the trade. No point in staying in it, because like I said before, the longer it stays at that level, the more chance you've got of it going against you, and that's what it did here. So we don't want that. Give it that 10-20 minute window, and if it doesn't move, then get out of it. Sometimes it'll go and then move, but it's okay. Another example here was sideways into that one and sideways into this one as well. So we don't want to do that. And then we get on to scalping. Scalping's not something I recommend. because not very often it does happen, but to trade from there to there to there to there to there to there to there it's hard to do, and we don't often get that. You're not very likely I'm not gonna give you a chart that's got 5 turn points. This is just an example that it does happen, and it can follow the line. So if you're keen to have a go, that's all good. I don't recommend it, but it does happen. So back onto the pattern examples here. So like I mentioned in the last video, we've got these ABCDs, and these are the simple ways to trade them. So with this Gartley is an ABCD into that C leg. So this B to C leg is an ABCD in itself. And that's given us the Gartley pattern and everything lining up. This is also a 1, 3, 5 pattern, which is something I'll go into later on as well. So you got lots of things happening here, giving us a high probability chance of a successful trade. Once again here, we have the patterns. So we had this Gartley coming into this time. Although it wasn't at a high point we were looking, it was still a good pattern example of things we look for. Like this is the Gartley pattern, the ABCD, the 61% pullback, retracement from this high and this low. And then obviously that rolled over there, and we had another one. So this second Gartley here came into this point here, which gave us this high didn't work because we were sort of sideways into it, so you wouldn't have gone with this one. But this second one here, we had that Gartley like in previous examples into this high, and that gave us the setup to trade from this time to this time. And yeah, that turned down, and we got a good trade out of that one. There's another one with the Aussie dollar with the Gartley. As you can tell, I prefer the Gartleys to most patterns, as they give us a good risk-reward ratio. And this is a nice example as well. You got the ABCD, the Gartley back into that 61%, and then expecting a turn down. So ideal setup here. This is what we look for on the sell side and on the buy side. And then we've got examples here of the AI not working. So if I send you out a chart and you get something like this, there's not really a pattern there to trade, and so we'll just leave that one alone. The same here. This one come up into the time, but just stayed sideways, and then we got into this point, and it was still sideways. So when it's doing things like that, better to leave it alone than to jump in and expect something. If we move on to the Euro Canadian here, this is the like a 2 or 3 day pattern, Gartley pattern to buy into this area here, and we came into the time expected to turn. It started all right, and then it rolled over, and that was the end of it. So this is an example of everything lining up. So your ABCD pattern, your Gartley pattern, your retracement into the time, had everything there, but just didn't work. So that's why we have stops, and that's why we like to keep the risk nice and small. Because if it doesn't work, it doesn't work. We just want to be out and look for the next one. So these are some trade examples for now. Hope this helps. I'll be doing some live videos as well to show examples as we go along. These will be posted on the Telegram group and also on the YouTube channel. So yeah, this just runs over a few for now. So I hope this helps. Thanks for tuning in, and yeah, see you on the next one. Cheers.